For those of you who don't know me, I'm the president of First Rate Property Management. So our office functions out of this building. Been in the property management space for about 15 years. I worked for Tony here and then took over the PM company for him so he could go do racing and hockey and whatever else he does on the side. Heavily involved in NARPM, which is a national association. So that gets us access to really good rental market data for you guys, which we try to provide to you. And I'm going to give you some early spring stats that I have. I know Stacy shares the NARPM vacancy survey that we do. That's part of the association we're part of. We obviously contribute to that survey, but it's a bunch of other property management companies in the area that help contribute to that, so we can try to tackle trends and anything that we need to be ahead of. So with that, I'll go into just a quick update. I don't need to be up here long unless you guys have questions. Spring is panning out to be a little bit slower than we've normally seen the pickup happen. I don't have enough data yet or enough insight yet onto whether it's just delayed and it's gonna pick up in our normal peak renting season is what we call it. It's usually pretty strong between April and August into September. That's just, I don't know if it's delayed yet or if we're not really gonna rise and just keep on this even kill. Reasons we know that's happening is there is overall less inquiries in general. And this isn't just speaking from First Rate. Like I said, we all chat. There's plenty of properties to manage in this valley. So we're ironically enough friends with a lot of other property managers. Inquiries are lower and slower. Average days on market, which I have some numbers I'll share with you in just a minute, are trending down a little bit. They're not terrible, but they're trending downward. And less applications overall. Some of it is due to just the uncertainty of a lot of things right now. A lot of people are staying put. So I will say the renewal rate in general is higher than we've ever seen at an 80% for us anyway, in this time. A lot of property managers choose to not have their leases expire on purpose in like October through maybe February. We start some in March. That's still panning out to be a good tactic for the peak season. But renewal rates in general usually are higher in the summer months for a lot of different reasons. So we're seeing higher renewal rates sooner. So a lot of people are staying put, which isn't a bad thing as an investor either. Just know that the properties that we are getting, that we get vacant, not occupied, are tending to sit a little bit longer than ones if we were to have an opportunity to pre-lease and get rented before the tenant moves out. So we're seeing that trend with single family homes. They will start to pick up when school gets out. So we're about a month away from that. But all of these factors are telling us that it really is about price. So price point is key. You're fine. Price point is key. So we are advising investors and owners, whether you self-manage or have another PM, whatever, just be aggressive on your rent. I have to remind owners a lot of times that you're stuck on this $50-$100 range. If you would just drop it to get it occupied, you're in the long-term saving money by letting it. And if you don't drop it, it's going to sit for a month and then you're already out that money. So sometimes it takes that explaining, but aggressive on rent, the price point is going to get it. So if you're needing to be below that next, so like the trick of $23.95 for a single family home rather than $2,400. I mean, we're talking $5, right? But people look under that. So price point is key. Property condition is still key. The biggest factor we've seen today, there are 3,100 rentals available in Boise. That's the most we've seen in this time of year and in several years. And those are ready. So those don't count the ones that are being built that aren't ready yet. The most active we've seen this early. So that tells me that the supply is catching up with the demand. We had that opposite problem a few years ago. Yes?
Of those 3,100, do we know how many are new ones?
No, I don't. I don't. It's all of the Treasure Valley ones. So some will be new. And I know there's some complexes out there that were being built that are trying to lease those now. But in general, we are still, our vacancy is still, I'll get to these numbers in a minute, is still okay. I know in general, there was some conversation with a bunch of PMs on a group text that we have that things are just moving slower because there is more out there. Now, that's not necessarily a bad thing. So renting's about a balance game, right? You're all investors, you all want to make good money. It's all about your bottom line. I understand that, but also having happy tenants and options for tenants makes the tenant pool a little bit happier, which then in return eventually makes it better for you as an investor. So we don't want angry tenants and everything that's too expensive. And then that's where legislation comes in, the city council oversteps their boundaries and all those things. So the balance is good, but the supply is catching up with the demand. And that's been an opposite problem in the last several years. So that is coming and I don't see that flipping anytime soon. So it's out there. Be aggressive approach. This may involve recommending rent reductions or incentives. Those have worked for people. That's what we've tried. A couple statistics for you. Average vacancy days for us is around 20, and that was compared to about 17 last time. So we're getting things rented on average in 20 days. NARPM's last report, which I'm just getting ready to fill out another one, so we should have results in about a couple weeks. We're sitting at about 28 for the valley, and that's the highest that's been in a long time. So that tells us things are moving a little bit slower. The good news is rents are still steady. They're not climbing, but they're not dropping. And then I put in parentheses yet. I don't have enough insight yet. It's too early in the season to tell. I don't think we're gonna have some decreases that maybe people were anticipating last year or this year, but we're not able to increase as much. Now, if there's some that are drastically below market or you've done a lot of upgrades that justify the value, then that makes sense. Vacancy rates. So, and this is all relative. So Idaho is sitting at 3.3% for all of the state, which is about average where they've sat for quite a while. First rate sitting at 1.5%. It's also the time of the month right now. So I ran this today. People have moved out. We turn it over and people are moving in this week. So that might fluctuate downward just a little bit. We'll probably be under 1% by the end of this week. But our national vacancy is pretty high at 6.9%. So Idaho's still trending in a good direction for investors and for renters. But some numbers, we're watching closely to see what adjustments need to be made. And that's all I have.